As COVID cases remain subdued, Indians are taking to air travel once again, even as the lurking fear of a third wave keeps the government on edge. The number of domestic air passengers in India is on a steady incline. The dip in May was because of the deadly second wave of coronavirus, which brought back the cycle of lockdowns and curfews, besides inducing inertia among frequent air travelers between May and June. Since July 6th, airlines had been operating at 65% capacity, in line with the directions of the Ministry of Civil Aviation. Before that, they had been operating at 50% capacity since 1st June. Earlier in August, the ministry had allowed flights to operate at 72.5% capacity, so we can expect the numbers for August to increase further. As for airlines, Indigo had the biggest market share of 58.6% in July. The occupancy rate or the load factor for these 6 major airlines was between 53.6% and 74.6% in July. In August, the government also hiked the minimum and maximum fare slabs that airlines could charge in a 30-day cycle by 12.5%. Analysts expect this move to help airlines prune the losses, but it may slow the sector's recovery to pre-COVID volumes. There is no cap on fares for flights beyond 30 days, and airlines are free to charge their own prices. A lot of other trends tell us that a recovery in the skies is truly on its way, with some caveats of course. According to a white paper by GMR, 90,000 passengers travelled daily through the Delhi airport during the first 10 days of August. This was 5 times more than the mid-May passenger volumes when Delhi airport handled around 18,000 travellers per day. The number by the end of June 2021 increased to about 62,000 passengers per day. The return ticket fares for travel during November to popular holiday destinations have begun their annual winter climb, even as fares for the big metro cities remain low. There are also different state-wise rules regarding COVID testing, either before or after the flight, but these continue to be eased. A recent Business Standard report also pointed out an interesting trend observed by Indigo. Smaller markets have seen sharper growth in traffic, reaching 80 to 90% of pre-COVID levels, when other metros were still at 75 to 80%. These smaller markets include Aizawl, Silchar, Bagdogra, Gwalior, Dharamshala, Ajmer, Surat, and Coimbatore, among many other such places. SpiceJet has also noted this trend. The reasons for this are many. Amid the COVID pandemic, travelers are preferring flights to trains, as the shorter durations would mean less exposure to the virus, one might argue. But even with the recovery in volumes, the aviation sector is in the doldrums, with most airlines seeing huge losses. Market leader Indigo recorded a loss of Rs 3,000 crores in the last quarter. Aviation turbine fuel prices have also increased 57% year-on-year. India has also extended the ban on scheduled international flights till the end of September now. According to airlines consultancy firm CAPA, domestic airlines are expected to post a combined loss of $4.1 billion in FY22, similar to FY21. It remains to be seen if higher ticket prices for flights will boost the recovery or adversely impact passenger traffic demand.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.